Hello my fellow investors, and welcome back to another stock analysis video as well as earnings report. And today guys, we're actually going to take a look at a company that we have done one other time here on the channel, Winnebago. I still don't know if that's the correct way to say that name, but this time this was brought up by Tony Myers, where he pretty much just said in a compilation of a bunch of companies he wants me to do, Winnebago was one of them, and I figured now is a great time to do it because they actually just had earnings about 5 days ago if I'm recording this video. So thank goodness I actually didn't do it up until now because we wouldn't have had earnings. So there it is. So let's take a look at this company, guys. Check out their earnings report. Check out their fundamentals and see if at the current price it is looking like a pretty good buy. So with that said, let's get started with this analysis. Alright, so now let's come over here to Seeking Alpha and take a quick look at the summary when it comes to their earnings. We got the EPS normalized actual came in at $2.07, which was a beat by 28 cents. EPS gap actual missed by 6 cents, $1.73. Revenue came in at $952.2 million, which was a beat by $86.1 million. Now let's come over here into the actual earnings report because you guys could see that when it came to analyst estimates, they beat on 2 out of the 3. However, that doesn't really tell me much of anything. I want to compare this to what they did last year to see if there was an improvement or did they decrease. So let's actually take a look at the earnings report, and like always, this will be linked in the description below if you guys would like to read the entire thing. So let's get started with this, guys. First off, they actually segment their earnings, or at least their revenues, when it comes to each individual, segment. We got strong motorhome and marine revenues up 10.1% and 65.7% respectively. Reported diluted EPS of $1.73 and adjusted EPS of $2.07. Pontoon market share of 6.7% on a trailing 12 months. Barletta continues to gain share, whatever that means. Strong liquidity, leverage, and cash position maintained. So I think this is pretty much like a quick summary of the entire thing. They said their revenues, their EPS, what the pontoon market share, something. I have no idea what that is, but sure. And they currently have strong liquidity and leverage, and cash has maintained. Now let's actually come over here. They do go on to their results over here, but I want to take a look at that further down. I actually want to take a look at first the President and Chief Executive Officer's Michael Hopp's comment. Winnebago Industries' first quarter results are a testament to the strength, diversification, and resiliency of our brand portfolio amid a dynamic macroeconomic environment. Growth in our motorhome and marine segments helped to mitigate challenging market conditions in our towables business, demonstrating to ongoing benefits of a more balanced array of outdoor recreational businesses. We're also proud of the investment our team continues to make in strengthening our golden threads of quality, innovation, and experience. This was evidenced recently with our Winnebago branded Hike 100 FLX travel trailer being named RV of the Year. Well, congratulations. By RV Business Trade magazine, and all 3 of our RV brands, Winnebago, Grand Design, and Newmar, receiving the 2022 Dealer Satisfaction Index Award from the RV Dealer Association. I want to thank all of our Winnebago Industries employees for their hard work during the quarter and their perseverance as we continue to face various challenges, including ongoing supply chains disruption at times. While we expect uncertain market conditions to continue to persist into the calendar year 2023, we remain disciplined in our business operations while still making smart investments in profitable differentiation for our future. So that was actually very, very interesting. They seem to be very, very positive, at least when it comes to their future guidance. Now let's actually come over here, guys. They continue to say this is how much this segment made, this is how much this segment made, but there's actually something interesting over here because they actually mention the balance sheet and cash flow, and they say as of November 26, 2022, the company had a total outstanding debt of $590.4 million, $600 million of debt, net of debt issuance costs of $9.6 million, and working capital of $617.7 million. Cash flow from operations was $29.9 million in the first quarter of fiscal year 2023. And now coming over here to the condensed consolidated statements, we got the net revenues, guys. This is what I mainly want to look at, not necessarily the analyst estimates. This is the most important one because we can see here when it came to the net revenues, 2022, $952.2 million, and in 2021, same exact time frame, $1.2 billion. Guys, that is a pretty big decrease. Operating income went from $146.4 million to 85.9, essentially $86 million. Net income total in 2021 was $99.6 million, and in 2022 it was $60.2 million. The EPS basic shares was $2.99 back in 2021, and then $1.98 this year, so that went down, and the diluted went from 290 to 173. So now guys, let's actually come over here to the calculator to see if whether or not this company is a good buy based off of their fundamentals. We got the ticker symbol for WGO, market cap of $1.6 billion, so rather small, with a PE of 5.06. That's looking really good though. Current share price of $53.63. Now this share price, guys, is actually down on the 1 year 19.37%, on the year to date 29.1%. That is insane. 52-week ranges is $43.05 to $78.88. We're not at the 52-week lows, but we are fairly close to that 52-week low in my personal opinion. Now, coming back over here, we do see that they do pay out a dividend of $1.08 in annual dividends per share, which is a yield of 2.07%, a payout ratio of 6.55, a 15.16 5-year CAGR, which is massive, with 4 consecutive years of dividend payment. Ex-dividend date is actually coming up on January 10th, 2023. Payout date is on the 25th of the same month, and they pay their dividends quarterly. Now, based off of the current shares outstanding, they pay out almost $33 million, which actually is not a lot. In fact, when it comes to their 5-year average free cash flow, take a look at this. They're still left with $145 million. And as of their last year's free cash flow, it's even more, almost $280 million. These payout ratios are 10.54% for the last year's free cash flow and 18.5% for the 5-year average, meaning that they can actually continue to increase this dividend into the future at a pretty safe rate. So now let's actually come over here to the fundamentals. We got the net income 5 years ago of $102.4 million to $390.6 million, increase of 281%. They did go down from 4 to 3 years ago. However, guys, this 3-year ago value is actually 2020, because their fiscal year actually starts in August, or at least ends in August. And that's essentially what we're seeing this. So yeah, the fact that we're seeing this outlier here isn't too big of a deal for me. My main issue is this massive jump from 4 to 2 years ago, right? From 111.8 to 282 million. That's a pretty big jump, guys. That's why I'm giving this a 55%. When it comes to the free cash flow, we see a little bit better when it comes to this consistency, but we do see inconsistencies as well. We got 5 years ago at 54.6 million. 1 year ago of $312.6 million, increase of 473%, with an average of $178.1 million. Now we actually see the opposite as we just saw with the net income. 3 years ago, they actually spiked up to $238 million. Now obviously this was an anomaly. As you can clearly see, they came down the following year to $192 million, but they still went up $100 million from 4 to 2 years ago, ignoring the 3-year ago value, and then they spiked up again to $312.6 million. So that's why, guys, I'm giving this an 80%. It is heading in the right direction, but these spikes that we see right here and the fact that they did go down technically from 3 to 2 years ago is essentially why I'm giving it 80%. Looking now at the revenue, this one isn't looking too bad. It's actually looking a lot better than the other two. However, we do see a little bit of anomalies. 5 years ago of $2 billion to 1 year ago of almost $5 billion, increase of 145.82%. They did go down from 5 to 4 years ago, but it was very minimal. Then they actually went back up, surpassing even 5 years ago. Then they spiked up. Well, there wasn't really much of a spike, but they did go up a significant amount from 3 to 2, and then from 2 to 1 once again. That's why I'm giving this a 90%. Coming into the total assets minus the total liabilities, this one's looking really good. Every single year they have been consistently increasing. There doesn't seem to be any massive outliers. As of today, they're at $1.3 billion in this difference. Average assets is around almost $2 billion. Average liabilities is $924.6 million. Doing this difference, we get $1 billion. I'm giving this guys a 100%. In the cash flow minus the liabilities, this one is kind of weird because we do have instances where they did bring it up slightly, but their lowest point was actually not COVID. It was actually 2 years ago at $961.3 million. But as of today, you can see they went from 961 million to 792, essentially $793 million. So they brought it up a significant amount. Average cash flow minus the average total liabilities, we get negative $750 million. I'm going to give this guys a 75%. When it comes to the shares outstanding, once again, very, very strange. 5 years ago, 31.5 million to today of 30.5 million. That is a decrease in the 5-year of 3.17%. However, take a look at this. From the previous year to the current year, that is an increase of 0.2%. They actually increased shares, which is not surprising, during COVID as well as the following year after COVID. Even though they did go down from the maximum amount of shares, I guess you could say, that they had during COVID, 33.6 million, and then they brought it down the following year to 33.1 million, and then they brought it back down again to 30.3, but then they increased it again. Right? They increased it 1 year ago to today, slightly, not a lot, but just slightly. That's why I'm giving this guys a 70%. And when it comes to the cash and equivalents, they currently hold $272 million with an average of $220.13 million. Looking at the weighted grade, guys, we gave the net income 55%, free cash flow 80%, revenue 90%, assets minus liabilities 100%, cash flow minus liabilities 75%, shares outstanding a 70%, overall grade a 77%. This would be a whole lot better, guys, if honestly their net income was just better. If there was more consistency in their net income, this would significantly be a lot better. But you know what? For being a small cap company, I wouldn't consider them necessarily small cap, right? Their market cap is like, what, $1 billion plus. So they're not small cap, but they're like mid cap, I guess you could say. For being a company of only like $1 billion, that's not too bad in my personal opinion. I think that they do have a lot of room to grow, especially when it comes to these fundamentals. They're not bad right now, but they could be a lot better. So their fundamentals are pretty decent. But is the current share price of $53.63 a good buy? We don't necessarily know. So let's do a discounted free cash flow using low, medium, high assumption, putting the revenue growth of 2%, 3%, and 4%, and a projected share buyback of -1, 0, and 1%, guys. Well, we essentially get $168 to $184 for the lowest to the highest assumption. Adjusting for debt, this comes down a little bit, by around $3 or so, to now $165.50 to $181.31, with a margin of safety of 5, 10, and 15%. The lowest one would be $140.66 to $172.24. Now, we did see here in the earnings report that, well, revenues for the fiscal year 2023 first quarter ended November 26, 2022 were $952.2 million, which was a decrease of 17.6 compared to the $1.2 billion from the fiscal year of 2022. Now, obviously, I would put this at a negative value. However, guys, remember that these revenue growths are projected 4 years into the future. So by that logic, I don't think that they'll do a negative revenue growth into the future. I think I'm being fairly conservative when it comes to these revenue growths at 2, 3, and 4%. Maybe I would argue that maybe 1, 2, and 3% would be better, but even then, the share prices don't really change that much, as you guys clearly saw. Overall, as it stands, based off of my assumptions, this is looking like an all-out buy. I mean, we're off by like $120 or so when you actually think about it, right? $120, $110 or something like that. Now, obviously, this is what I'm getting. What you guys get may be something completely different. Obviously, that's why I highly encourage every single one of you guys to, of course, link in the description below, read the earnings report for yourselves. I looked at it very, very briefly. If you guys want to actually invest in this company, read the earnings report, read the 10Ks. Second, have these calculators for free, guys. I have them available for free for that reason, because I want you guys to determine your own valuation for companies. Every investment is the present value of all future cash flow. I say that in every single video, and I realize that I've never fully explained what that term actually means. So I will make a video this weekend about it, because I think it's very, very important, and it pretty much summarizes the entirety of value investing when you think about it. So make sure you have these calculators and make your own assumptions. If the company is banks and insurances, I have a calculator for that too. If it's a REIT, I have one as well. And if you guys want a dividend tracking sheet, you guys can have this one as well. Everything is for free, guys. I don't agree with having anything behind a paywall, especially when something like this, right? It's like if I ever want to put something behind like a paywall, or if I ever want to sell you guys something, it'll be something tangible like a mug or like a shirt or something of that nature, right? That's why like I'm giving this all out for free. I don't have any sponsorships. The best way that you guys can support me in my endeavors is like, subscribe, comment. It really does help. And of course, share. I keep forgetting to ask you guys for that, but of course, share. Sharing helps a lot too, guys. So if you know people that may want that kind of content because they're suffering right now with like companies like Tesla or Palantir or whatever, you know, hit them up with my channel. That would be awesome. Again, all for free, guys. That's all I'm asking for, is just help me grow my channel. Like, subscribe, comment. Thank you so much for the 1,700 subscribers. Y'all are crazy. That was the goal for by the end of 2022, and we reached it as of December 21st. So thank you all so much. I really do appreciate it. So now let's actually come over here to the dividends, because with $1.08, it's not a lot, but the calculator is saying that this is looking like a really good price to buy it at. Putting in $5,725, this nets us 106.75 shares, which gives us an annual dividends of $115.29, quarterly of $28.82, and monthly of $9.61. Now this may not be high, guys, but their CAGR is massive. And again, remember, their payout ratios in regards to the free cash flows are really small, so you might get a lot of increases when it comes to this company in the future. All in all, my statement when it comes to this company, I think it remains the same as last time. I think they do have potential. I really do think they do. So do with that information as you will. I'm not really interested in buying this company. They look interesting, don't get me wrong, but me personally, for my portfolio, I'm not really that interested. Not saying that they're bad, but me personally, it's a pass. If you guys want to invest in it, obviously do your own due diligence first. Thank you, Tony, for the recommendation, and that pretty much does it for this video, everybody. Like if you like, comment, subscribe. Once again, you guys can follow me on my music sites, link in the description below. So with that said, peace out, and we'll see you all in the next earnings report as well as stock analysis video.